All right, good morning, everyone. It is 9:30 a.m., so we are going to start our Insurance and Me class with Portage County Financial Wellness Fair. Thank you all for joining us today or this morning. I am Shannon Jursa. I'm a State Farm agent in Garrettsville, Ohio, and I'm going to host a class called Liability and Me. The concept is just to really break down liability for you so that you understand what's important and how to protect yourself, how to come up with those terminologies. So our biggest exposures in our everyday life when it comes to liability are our auto, our fire, which is our home, our residence, our business, an umbrella for those people who are affluent and have more assets. And then I really kind of want to explain a they got what. What are some historic lawsuit settlements here in Portage County that were local, as well as a liability worksheet. This will help you identify and categorize the things that you would need to list in order to ensure the liability limits you should be covered for. So let's start with the first subject, and that's going to be your auto liability. This is our greatest exposure. More people own vehicles than they own homes. So what is required? Your liability is broken down into the major component is what the state of Ohio requires you to have, and that is your bodily injury and your property damage coverage. Let me go back. Your bodily injury per person, bodily injury per accident. Those are going to be the first two characters that you see when you look at your liability limit. The liability per person is the maximum number of dollars per the thousands that any one person can claim for injury, pain and suffering, and loss of wages or income. And then you have a per accident because there can be more than one person in the vehicle that was struck, that was injured, and the per accident is going to be the maximum number of dollars in the thousands, again, that any number of persons can claim for injury, pain and suffering, and loss of wages and income. The third number that you're going to see on your liability limit is going to be your property damage per accident limit. So this is the maximum number of dollars, once again in thousands, that the insurance company will pay out for tangible property that you have damaged as a result of striking them with your automobile. So as an example, if we have an at-fault driver and he had liability limits of 100, 300, 100, the first two numbers are going to be your bodily injury per person, and then your last number is going to be your property damage. So as an example, if there were 3 passengers in a vehicle that you hit, their medical bills are, the first person had medical bills of $20,000, the second person had medical bills of $14,000, and the third person had medical bills of $3,000. Well, the first thing that we're going to look at is any one person's bills, do they exceed the per person liability limit? And the answer is no. 20, 14, and 3 is all below the $100,000 per person. The second question is going to be, is the $300,000 enough to cover more than one individual? Once again, 20, 14, and 3 is definitely below 300,000. So where we have no one person had injury above 100,000, all of them are 100% recoverable limits. So that says that each person is able to claim 100% of their bodily injury liability and it be recoverable. And then the total amount of the injury for all 3 people did not exceed 200,000. It actually only came up to 37,000. So all 3 are able to be paid at 100%. So if, as an example, person number A had bills of 100,000, person number B had bills of 100,000. I did not realize this was touchscreen. And person number 3 had limits or damages of 150,000. That's 350,000. The insurance company will pay no more than 300,000. And then the property damage is $22,000, which is below the per accident limit of $100,000. So in this case, the person that caused the damage had adequate coverage. All 3 individuals have 100% recoverable limits, as well as the vehicle had 100% recoverable damage. So we would call this policy adequate for that loss. So then understanding the liability limits, so they're determined based on the assets in the household. So a renter is more likely to purchase state minimum than a homeowner. So when we look at liability limits side by side, you can see on the graph that someone who has state minimum is going to have 25, 50, 25. That's $25,000 per person, $50,000 for any number of persons for bodily injury, and then $25,000 in property damage. That's what the state of Ohio says you are required to carry if you have a vehicle registered for use on public roads. The liability limits can exceed the $1,003,000, but they are sold in these first three increments: 25, 50, 25, 50, 150, 100, 300, 100, 250, 500, 250, and then we have limits such as 300,000, 500,000, 1 million, 3 million, 5 million, so on and so forth. So for someone who rents, state minimum may be adequate, right? They don't need the wall to their castle to be very high because they don't own a castle, right? But this person here maybe has a business, he's a doctor, he's a surgeon, he has several assets. He has assets in his home, equity in his home, so it would be important that his castle wall is much higher than someone who doesn't have those things. So for an exercise for this one, so we're gonna use the rule of thumb that says that you need 60% of your income to cover basic living expenses, and that the other party was awarded 40% of your income for 10 years. That is a fact in the event that you are sued in a civil lawsuit and you did not have adequate or any coverage for liability purposes. The maximum you could be sued for is 40% of your income for 20 years. It is really rare for anyone to have that. That's why we have insurance, to protect our assets. If your agent is doing the right thing, that would not be a problem for you. But in this example, if you are the person who is sued and the lawyer or the judge awards the other party 40% of your income for 10 years, will your current liability limits of your policy be able to pay that lawsuit? That's question number one. And that's all information you have to think of yourself. What is my liability limit? And if I were sued today, is that liability limit enough to cover that? If the answer is no, I advise you talk to your agent. How high, I keep bumping with my elbow, how high does the wall around your castle need to be? Okay, everyone's different. There is no cookie cutter place that we can put you into that says that, okay, if you own this, you go here, if you own that, you go there. Everything in our lives is never-ending revolving. So if we purchase a house, we pay down on it over years. As we pay down on it, that means we have more equity in it. The more equity we have in it, the higher our liability coverage needs to be. So you should be actively engaged in talking to an insurance agent every few years at a minimum, at an absolute minimum, just to ensure that as these life changes take place, if you gain assets, you inherit assets, if you lose assets, your liability limits should flow and fluctuate to match that, to ensure that you have the coverage. Here's another exercise. You cannot carry under or uninsured motorist limits that are higher than those that you assign for other people. So what I want to give down before we do this exercise, and I ask these two questions, is, as an example, I have 250, 500, 200, or 250, 500, 250, okay? This means that if I carry these limits and I cause an accident, this is how much the insurance company is going to pay out on my behalf, okay? The state of Ohio says that if I'm willing to give this much coverage to someone else, I can also have that much coverage for myself, and that's in my uninsured, underinsured motorist coverage limits. Fun fact, over 15% of Ohio drivers are driving without insurance based on 2021 data. So, 2 out of every 10 drivers, 1 out of every 5 that you're going to experience on the road is driving without insurance. 3 out of 5 will likely be driving without adequate insurance. So your uninsured, underinsured motorist coverage is for you and the passengers of your vehicle. So if you have assets that are this high, we may not be worried about you causing an accident and you feel that liability limits this low are adequate because you're a safe driver, right? But you can't protect yourself and your family with limits this low. Okay, you need limits this high to protect yourself, but you can't buy them if you're not willing to give them to someone else. Okay, so that is a rule. So knowing that rule, if someone hits you and they didn't have insurance, is your uninsured motorist enough to cover your bills? okay? The second question is, do you carry passengers in your vehicle that your uninsured, underinsured motorist needs to cover, okay? So maybe you are a grandparent and you don't have very many assets, okay? You want to save money. You are on a limited budget. I understand that, okay? But you also transport your grandchildren on a daily basis. You have to remember that your uninsured, underinsured motorist is also protecting them. So if someone hits you while your grandchildren are in the vehicle, if they do not have insurance or have adequate insurance, your grandchildren's bills will not be paid. They will not be paid on time. They're not going to be paid through the policy, and your children will suffer the burden of those medical expenses, at least until the lawsuit or whatever is settled with the insurance company, which could take up to 2 years. Generally, it's only a couple dollars more per month to ensure that you have adequate liability limits and adequate uninsured, underinsured motorist liability limits. And it's important that you're thinking of the other people in your car. Okay, so it's not just about you and how you are as a driver, but it's about the people that are in your vehicle and protecting yourselves as well. Okay. We have premise liability. So we generally think of this with slip, trip, and fall, right? Homeowners insurance. Premise liability is actually purchased through one of 4 types of standard community policies, okay? So let's take businesses out of the equation. We're just talking about personally owned, okay? Not commercially owned at all. We have our homeowners insurance policy. That is when it is owner occupied. So you live in the home, even if you have a loan on it, you live in the home, and the structure is your responsibility. We have a condo unit owner's policy. So this is when you live in a condo and you own the condo. We are covering from the studs in. The homeowners association for the condo unit association will cover from the exterior walls out, which includes the roof and the siding. Then the other 2 policies, we have a rental dwelling insurance policy, and this is where we own the home but we do not live in it. We call that a landlord policy. And then we have a renter's insurance policy, and this is where our tenant lives there, not the owner of the property. Okay, so if you can rent an apartment, you can rent a house, you can rent a townhouse, you can rent a manufactured home. You should have renter's insurance, okay? If you own the home but you do not live in it, you have tenants, even if those tenants are family members or siblings or best friends or whatever, you should have a rental dwelling insurance policy. To receive the liability limits to protect you as the owner of that property or the living resident of that property, you need a premise liability policy, and these are the 4 places that you would purchase it from. What are the most common liability lawsuits? So, dog bites, slip and falls, inadequate security, asbestos exposures. We usually see that like in apartment buildings or something like that. So let's say you're a tenant of an older home or an older apartment building, a pipe burst in the wall, they have to come in, they have to cut out that wall, they've got to aerate it and dry it out, and through all of that asbestos was uncovered and you ingested it. Well, the owner of that property is going to need liability insurance to protect the lawsuit that you are now going to put on them because their actions made you sick. Roadway and sideway defects, poorly lit staircases, and iced entrances on premises, okay? So these are the most common liability lawsuits. These are the number 1 reasons that people sue, okay? Now, they can sue for any reason. I want you to keep that in mind. Your neighbor can sue you because they don't like the color of your house. They can sue you because your dog barks too much. That does not mean that a court will accept the lawsuit. A lawyer can file the lawsuit because you want them to, because you paid them to. So really anyone could sue for any reason. Your insurance will never protect you from getting a letter that says you're being sued. What your insurance needs to protect you from is any settlement, any money out of your pocket, okay? So just keep that in mind. This is the most common liability lawsuits. That does not mean that they are most often paid out, but these are what is most often filed. So where, why, and how? So your liability per occurrence, once again, now we're not talking about a per person limit like with the car, we're talking about per occurrence. And that's the maximum number of dollars payable per liability claim. So you can have more than 1 incident a year where someone slips, trips, and falls on your property and wants to sue you. The per occurrence limit is going to pay for that specific incident. Then you have the liability general aggregate limit. So this is the maximum number of dollars per year that can be paid, regardless of the number of claims filed. So there's not generally anything that says that you can only have one liability claim or two liability claims or three liability claims. But what we see is that the liability per occurrence starts at $100,000, and in that case, the general aggregate would be $300,000. So you can have $10,000, $30,000 lawsuits, as an example. An asset check is performed to find potential monies in easily liquidated assets in the event of a claim or a lawsuit. Your liability limit should exceed the assets you have. That is a fact. The first thing a lawyer will do is run an asset check on you. And they're going to look for anything that you own, any properties you own, land you own, any vehicles you own, any monies in the bank that are public record, which sounds weird, but there is a way to track assets that way. And that's what they're going to do. They're going to look to see what you have, and obviously their objective is going to be to go after the max. So you need to ensure that those assets are adequately covered. So what are we talking about when we say we're running an asset check? So we're looking for the equity in the home, condo, in your auto. We're looking for your savings and CDs, any life insurance cash values that you have, future income. Once again, this is at 40% of your income for 20 years. Retirement and investment accounts. Some accounts will be secure, such as trusts. You need to work with your lawyer and your accountant to ensure that certain assets are adequately protected. Land, as well as gold coins, cash in vaults, things of that nature, jewelry, furs, all of those things can be liquidated and sold off to pay a lawsuit. Example, so I'm going to give you an example. A homeowner has $100,000 in liability included in her homeowner's insurance policy. So this is just how the policy comes. That's her premise liability. She has the following assets. She has equity in her home and cars that total $72,000. And in savings, she has $12,000, and investments, $51,000. That's what she has total. In the event of a slip, trip, fall claim, does the insurance policy carry a high enough limit to protect the assets of the insured? The answer is no. The assets exceed $100,000. She should have a higher liability limit. If the homeowner did not have investments, would the liability limit be high enough to cover her assets? Yes, 72 and 12 is 84. That is below the $100,000 threshold. Business liability. Let me just say business liability is a whole other world. And if you're watching this video, it probably is not as relevant to you as it may be to someone else. So I'm just going to keep this very simple. 54% of lawsuits, civil litigation, involve businesses. If you own and operate a business, talk to an agent. Liability umbrellas. Okay, so a liability umbrella goes with you everywhere you go. Imagine being bubble wrapped, right? And you're just bubble wrapped anywhere you go. The grocery store, on vacation, to work, to home, in your car. This is going to follow you. This is an extra level of protection. Why should you consider a personal liability umbrella, or a PLUP, as we would call it? So studies from 2021 show that 13% of Ohio drivers were reported as driving without insurance, which is an uninsured driver count in the state of Ohio. 1,044,263 drivers were found in last year driving without insurance. 1,044,263 in the state of Ohio. Most companies that have an un or underinsured motorist endorsement that can be added to your PLUP. Once again, let's talk about the passengers of your car. You cannot carry liability limits higher than what you provide for your bodily injury liability limits for your general liability. So if you have several assets and you need the $1 million umbrella, you would need to carry liability limits and have a PLUP in place. So how do we figure out if we need that? Well, the liability rule of thumb is buy as much as your net worth. Okay, you're going to do a net worth calculator. If you have concerns that you don't have enough liability coverage, purchase $1 million liability policy. If you're concerned that $1 million's not enough, add another $1 million. They're sold in increments of 1, 2, 3, 5, 10. Okay. Umbrella liability is one of the least expensive forms of insurance. Okay, your auto insurance policy may be $100 a month, $200 a month, $300 a month. I mean, it could be $50 a month. But for some people, the umbrella policy is only $100 a year. Okay, to add that extra million in liability coverage for them. Okay, so now let's give our scenarios. Okay, you're driving home from the store when another driver runs a stop sign and T-bones your vehicle. You suffer serious injuries and need life flight services. The at-fault driver did not have insurance. Okay. Do you feel comfortable that your auto insurance policy has adequate coverage to cover all of the bills associated with your medical care, loss of income, pain, and suffering? Okay. Here's the second scenario. You're watching your grandchildren and you go to the park. On the way there, another vehicle crosses into your lane and hits you head on. You are killed and your grandchild suffers life-threatening injuries. The at-fault driver carried liability limits of $100, $300, $100. Do you feel comfortable that your auto insurance policy has adequate coverage to provide compensation to your family for the loss of your life? What would that do to your household if another driver crossed the line and hit you head on? And it's your insurance policy that is going to compensate your family, not their insurance policy because they didn't have one, or they didn't have enough coverage for your life. Let's say they had state minimum or $50,000, or even in this case, $100,000. Is your life worth more than $100,000 to your family? Probably because your future income is gonna provide for your family. And without you there, that future income is gone, okay? You are your biggest asset in your house. And the only way to protect yourself is through uninsured, underinsured motorist. And the way to ensure that you will always be protected is an umbrella. So we're not always worried about someone slip tripping and falling on your property. I'm not worried that you take care of your premise. I'm not worried that you have care, control, and concern for other people. I'm worried about other people not having the same care and control for you, okay? They got what? So in Summit County, for an auto accident, a $160,000 settlement. We have a $130,000 verdict in Stark County, Ohio, for a car accident where the passenger was injured. And then we have a $750,000 settlement in Portage County for an auto accident. So let's look at these details. The $160,000 settlement in Summit County. A woman was stopped in traffic when her vehicle was rear-ended, causing crushing injuries to the back of both her calves. She required treatment in a local wound center consisting of debridement and skin grafts. Her claim settled before litigation, so it went to court, settled for $160,000. On the $130,000 verdict in Stark County, a gentleman was a passenger in a friend's vehicle. They were going fishing and decided to stop at a fast food restaurant on the way. The driver made a left turn into the restaurant when his truck was struck on the passenger side by an oncoming vehicle traveling well in excess of the speed limit. He incurred a variety of soft tissue injuries and was ultimately diagnosed with chronic pain syndrome. He received treatment at a pain center where he received trigger point and spinal injections. The insurance companies were not willing to negotiate a fair settlement. A lawsuit was filed, and after 3 days of trial, the jury returned a verdict of $130,000 against the driver of the speeding vehicle, a verdict which, at the time, was the second highest personal injury verdict in Stark County. Claims are getting more expensive. And our big one in Portage County, a young woman was involved in a head-on collision with a dump truck. She was transported by helicopter. This is your life flight. By the way, that bill's $44,000. Last I knew. To a local trauma center where she was hospitalized for 3 weeks with injuries consisting of a collapsed lung with insertion of a chest tube, left mid-shaft femur fracture requiring surgery, left patellar fracture, right foot crush injury requiring surgery, ruptured Achilles tendon requiring surgery, and readmission for infection, and multiple rib fractures. Her medical care lasted approximately 1 year, and the suit was filed in the Portage County Common Pleas Court. The claim was settled at private mediation for just under $750,000. Once again, I'm not worried about you as a driver. I'm worried about other people. Okay, so how do we figure out what our net worth is? Okay, we want to figure out our liquid assets. We want to think of our investments, our personal assets, as well as our retirement assets. What you want to do is go ahead and columnize and add all of these up. Then we're going to take our total assets and we're going to subtract our auto liability limits, and then we need to find out if there's an uninsured limit there. You know, or did you not have enough to cover it? How much is that by? And then for your total assets, we're going to subtract your homeowner's liability and find out if you're uninsured on your premise liability. So very simple. There's tons of resources on the internet, sheets that are out there for you to go ahead and look up. This is me. I want to thank you all for spending a little bit of time with me this morning. Sorry for stuttering through a few things. You are welcome to reach out at any point in time. I'm happy to answer any questions you have, whether or not you're my client. I just enjoy being a resource for people and sharing my knowledge. And just want to thank you for your time. And hopefully we'll see you all here in person next year. Thank you, everyone.
Thank you.
Do you have questions? We'll do a Q&A. I got 2 minutes.
I don't know at this point. I just want to go home and look at my
policy,
levels,
check
my
your policy?
policies, yes.
Yeah.
And see what we've got going on.
Yeah, so this is what I would say. Okay, so on our liquid assets, we have our cash, checking account, CDs, savings, life insurance, cash values, or any other, you know, gold coins and vaults and things like that. Most people aren't going to know those exist. That's fine. Investments, your mutual funds, your stocks, your bonds, treasury bills, or others. Personal, your homes, your cars. And then 40% of your income times 10 years. That I think is a pretty good way to just judge a liability limit, to say that that's worst case scenario. Let me at least make sure that that's covered. Pension values, tax deferred accounts, future earnings, others. It really just take a good look at your assets. If you look around and say, what can a lawyer come in here today and say, I'll take that, and that. If that's what you come up with, that's what we're protecting, okay?
That makes sense.
Yes.
But yeah, now I really do want to look at my policies.
So thank you all for spending time with me, and reach out if you need anything.